Hello, dear students. This is the revision problem number 2 of your journal chapter for your internal assessment 1. So, let us start our revision problem. The first transaction is started business with cash rupees 50,000, bank rupees 20,000, goods rupees 20,000, furniture rupees 4,000, machinery rupees 8,000, bills payable rupees 12,000 and creditors rupees 4,000. How do we journalize this? Very simple. Cash, bank, furniture, machinery are all assets. If the goods are brought in by the business owner, we call it a stock, but that is also an asset. Now, bills payable and creditors, these are the personal liabilities of the business owner that the business owner is bringing into business. That is, there was a personal liability, the business owner will be existing before starting business, no? So, the personal liability of the business owner is telling that the business will pay. So, personal liability is brought in. Now, since the business has to pay to the personal liability of the business owner, the capital will be reduced. So, the amount of creditors and bills payable will be deducted from the total assets brought in, and the balance will be recorded. So, it will be two capital account, two bills payable account, and two creditors account. The narration will be being business started with sundry assets and liabilities. The logic is all these assets are increasing, so the if assets are increasing it is debit, and liabilities and capitals are increasing, so it is credit. This is the logic. This is the first entry. So let us go to the second entry. Second transaction is bank borrowed loan from bank. So whenever we borrow loan from bank, the bank account is increased, bank balance will increase because bank people will deposit the amount in bank account only. So bank account being an asset, it is increasing. So bank account debit, and bank loan will have to repay to the bankers, right? So it is liability, it is increasing to bank loan account. So bank account debit to bank loan account. Narration will be being bank loan taken, and the logic as usual, bank is an asset, it is increasing, so debit, and bank loan, it is a liability, it is increasing, so credit. So the next transaction is gave loan to Paresh rupees 5,000, and in bracket we have given rupees 3,000 in cash and rupees 2,000 by check. So Paresh has been given loan in two forms, one in cash and one in bank. Now, since the business has the right to receive the amount from Paresh, it has to receive in future receivable. So Paresh becomes an asset, and since Paresh balance is increasing, Paresh account debit. Then cash and bank are my assets, and since it is decreasing, cash two cash account and two bank account. Narration will be being loan given to Paresh in cash and by bank. Logic is Paresh asset increasing debit, cash asset decreasing credit, bank asset decreasing credit. The next transaction is borrowed from Karthik rupees 15,000, rupees 5,000 by cash and rupees 10,000 by check. So we have taken loan from Karthik. The business has to repay to Karthik. So cash balance is increasing, and when we receive check, we deposit in bank and our bank balance will increase. So cash account debit, bank account debit to Karthik account. Now the narration will be being loan taken from Karthik in cash and check. Logic is very simple. Cash asset increasing debit, bank asset increasing debit, Karthik liability increasing credit. The next transaction is purchase goods from Srinivas. Now, dear students, even if the question does not mention what we have purchased, the assumption is goods only. So it is purchases account debit, and since name is given, it is a credit transaction. So purchases account debit to Srinivas account, 50,000 and 50,000. All right. Now the narration will be being credit purchase of goods. Logic is purchases expenses increase debit. Srinivas liability increase credit. The next transaction is sixth transaction, sold goods to Varun. Since the name is mentioned, it is a credit transaction, and since we are doing sales, it's an income. So the business has to receive money from Varun. So the journal entry will be Varun account debit to sales account, because Varun is an asset, it is increasing, so debit, and sales is my income, so it is credit. Varun account debit to sales account. Narration will be being goods sold to Varun. The next transaction is paid to Srinivas rupees 49,500 in full settlement. Whenever the term full settlement has been given, we'll have to check for discount allowed or discount received. We had to pay, that is the business had to pay rupees 50,000, but it has paid 49,500. So that means that the business has paid 500 rupees less. So there is an income. The liability is decreasing and cash is going out because nothing has been mentioned. The journal entry will be Srinivas account debit 50,000 to discount received account 500 to cash account rupees 49,500 because discount received income increasing, so credit. Cash asset decreasing, so credit. Srinivas liability decreasing, so debit. The next journal entry is Varun returned goods worth rupees 1,000 as defective. That means that the Varun will be paying us less, so asset will be decreasing, and since the Varun is paying less, it's a loss for the business. So the journal entry will be sales return account debit to Varun account. Sales return is my expense, so it is increasing, so debit. Varun is my asset, it is decreasing, so credit. The next journal entry is withdrew goods for personal use at market price. Remember, if the goods have been withdrawn by the proprietor at market price, then it is as good as selling the goods. So the journal entry will be drawings account debit to sales account, and the narration will be being drawings made. Logic is drawings is an asset, it is increasing, so debit. Sales is an income, it is increasing, credit. In this transaction, Varun has paid rupees 38,750 in full settlement. As I have mentioned earlier, if the word full settlement is given in a transaction, we will have to check for discount allowed or discount received. So the journal entry will be bank account debit because we have received through check. Bank balance will increase, bank account debit. Since Varun has paid less than what is to be paid, it's a loss for us, so discount allowed account debit 250. Then to Varun account rupees 39,000 is the journal entry because Varun asset decreasing credit. Then bank balance is going to increase, so bank account debit, and discount allowed loss, it is increasing, so debit. Bank account debit, discount allowed account debit to Varun account. The next transaction is purchases rupees 14,000. As discussed earlier, if nothing is mentioned, then the assumption is goods, so purchases. So and nothing mentioned, so the assumption is cash. So the journal entry will be purchases account debit to cash account. The narration will be being cash purchases made. The logic is purchases is my expenses, it is increasing, so it is debit. Cash is an asset, it is decreasing, so it is credit. The next one is sold rupees 10,000, and then within bracket we have told worth rupees 9,000. The interpretation is sold goods worth rupees 9,000 for rupees 10,000. Remember, in our journal entry we do not bifurcate the profit element, and then we do not show profit separately in journal entries for goods. So the journal entry is cash account debit to sales account. We'll record the sale price, that is 10,000. We receive cash 10,000 only, no? So cash received is 10,000 and sale price is 10,000. So cash account debit 10,000 to sales account 10,000. Narration is being goods sold for cash. Logic is cash is an asset, it is increasing, so debit. Sales is my income, it is increasing, so credit. So the next transaction is sold on account rupees 20,000 to Mr. Arjun. When the word on account is used, it is understood that it is an credit transaction. So we have sold goods, but we have not received amount. We have to receive the amount from Arjun in future, so it is receivable. So Arjun is my asset debtor. So the journal entry is Arjun account debit 20,000 to sales account 20,000. Narration being credit sales to Arjun. Logic is Arjun is my asset and it is increasing, so debit. Sales is my income, it is increasing, so credit. In the next transaction, we have purchased goods on account from Mr. Alok rupees 40,000. Now the journal entry, as discussed earlier, on account means it's a credit transaction, so we have purchased and we have not paid, so the business has to pay to Mr. Alok on a future date, so it is payable, so it is liability. And purchases we have done, so it is expenses, so purchases account debit to Alok account rupees 40,000, 40,000. Narration will be being credit purchases made, and the logic is purchases is my expense, it is increasing, so debit. Alok is my liability, it is increasing, so credit. The next transaction is withdrew for office use rupees 10,000. Please be careful whenever they give this transaction. If the goods have been withdrawn for office use, that means cash balance has increased and bank balance has decreased. Please do not get confused with office expenses and office use. Office use means it is cash account debit to bank account, because when we withdraw cash from bank, our cash balance will increase and our bank balance will decrease. So it is cash account debit to bank account, cash asset increasing debit, bank asset decreasing credit. So the next transaction is paid office cleaner rupees 1,000 and rupees 2,000 for other office expenses. Since they have told office expenses, it is to be treated as office expenses only, and office cleaner is also treated as office expenses. So the journal entry will be office expenses account debit to cash account, and I have totaled it up for our convenience sake. I did not want to increase one more transaction, so I have totaled it up and put the total amount as 3,000, 3,000. Narration will be being office cleaner and office expenses paid. Now the logic is office expenses is my expenses and it is increasing, so it is debit. Cash is my asset, it is decreasing, so it is credit, because when I pay cash, it is going to reduce. Oh, sorry, this is my revision video, right? I cannot explain why it is decreasing and all those detailed, explanation. If you want the detailed explanation, please stay tuned. I'll be uploading one more video on a detailed thing, but after IA. The next transaction is deposited in bank rupees 5,000. My dear students, if you are getting confused on which account to be debited, which account to be credited in this one, always see from the viewpoint of cash. Just see whether the cash is going out of the business or cash is entering the business. In that way, you will not commit mistake. Like in this case, if we are depositing in bank, the cash is going out, the cash balance is decreasing, so the journal entry will be bank account debit to cash account 5,000, 5,000. Narration will be being cash deposited in bank. Logic is bank is an asset, it is increasing, so debit. Cash is an asset, it is decreasing, so credit. The next transaction is received from Arjun on account rupees 19,000. Since the word on account is there, we should not, it is a credit transaction, but with this word, there is a word received in the transaction, so we should give preference to that word. Since we have received from Arjun, we will have to account for bank or cash because we have received it. Since the transaction is silent, the assumption is cash, so we have received cash from Arjun. So the journal entry will be cash account debit to Arjun account 19,000. My dear students, we need not check for the discount allowed or discount received because the word full settlement is not given in this particular transaction. Cash is my asset, it is increasing, so debit, and Arjun is my asset, it is decreasing, credit. No need to check for discount allowed or discount received because the word full settlement is not given. The next transaction is paid Alok rupees 30,000 on account. My dear students, I forgot to mention in the previous transaction. If they have not told the word full settlement in the transaction, you need not check for discount allowed or discount received. Only if they have told full settlement word in the transaction, then you should check for discount allowed or discount received. In the earlier one received from Arjun also, we have not told in full settlement. In this also, we are not telling full settlement, so we need not check for discount received or discount allowed. The journal entry will be Alok account debit to cash account 30,000, 30,000. Being paid to Alok will be the narration. Now the logic is Alok is my liability. Since I pay, the liability will decrease, so liability is decreasing, so debit. Cash asset decrease credit, because cash I'm paying, my cash balance is decreasing, so it is credit. The next entry is transaction is salary paid to Kishan. Now this is one of the ways of PU board to confuse you. Please do not get confused. Even if they give name with salary, it is always a cash transaction. So the journal entry will be salary account debit to cash account 10,000, 10,000. Narration will be being salary paid to Kishan, and the logic is salary is my expenses, it is increasing, so debit. Cash is my asset, it is decreasing, so credit. Now the next transaction is rent receivable rupees 5,000, accrued commission rupees 4,000. I have passed two separate entries, but the logic is logic I'll explain only once. Now listen. The journal entry for rent receivable is rent receivable account debit to rent because I have earned rent but I have not yet received. It is my receivable. I have the right to receive, so it is receivable. Rent receivable account debit to rent account. The narration will be being rent receivable accounted. Now the word accrued means accumulated commission. So it is my right. I have not yet received it, but I have the right to receive it. So accrued commission account debit to commission account will be the journal entry being accrued commission accounted. Now the logic is very simple. For rent receivable, it is rent receivable asset increase debit, and rent is my income, it is increasing, so credit. And for accrued commission is asset, it is increasing, so it is debit, and commission, it is income, it is increasing, so credit. The next transaction is water charges paid by check. So water charges is my expenses, so it is increasing, so it is debit, and bank balance will decrease if I pay through check, so it is credit. So water charges account debit to bank account. Narration is being water charges paid through check. Logic is water charges expenses increasing debit, bank asset decreasing credit. The next transaction is electricity charges payable. So the journal entry will be electricity charges account debit to electricity charges payable account. Amount is 1200. Now electricity charges is my expense, since it is increasing, it is debited, and electricity charges payable is my liability, and since it is increasing, it is credited. The narration is being electricity charges payable accounted. Logic is electricity charges expenses increase debit, electricity charges payable liability increase credit. Now the next transaction is outstanding salary rupees 70,000. One place we have to account the expense, and one place we should show the liability. So the journal entry will be salary account debit to outstanding salary account, 70,000, 70,000. The narration will be being outstanding salary accounted. Logic is salary is my expense, that is business expense. It is increasing, so debit. Why? Because every time we pay salary, it is increasing, the expense will increase. Oh, sorry, this is revision, right? Salary expenses increase debit, and outstanding salary liability increase credit. And the last transaction for this particular problem is rent received in advance. Anything received in advance is always our liability. So since it is received and it is not telling in cash, in check, we should always assume that it is cash. So the journal entry will be cash account debit to rent received in advance account, 4,000, 4,000. The narration is being rent received in advance accounted. Logic is cash asset increase debit, rent received in advance increase, it is liability, it is increase credit. For more such important questions and concepts and logic and other related matters in accountancy, please do share and subscribe our channel so that you will be getting quality contents at your home and at your convenience. Thank you.